Have you ever wondered what happens when boundless ambition meets unbridled capital? Today, we're diving headfirst into one of the most spectacular business dramas of our time, the incredible, almost unbelievable story of WeWork. It began with a simple, yet revolutionary idea, transforming the way we work. But what started as a flexible office space solution quickly ballooned into something far grander, a vision that promised to change the very fabric of global commerce and community. It was a dream so compelling, it captured the imaginations of investors and entrepreneurs worldwide, creating a whirlwind of excitement and opportunity that felt almost limitless. At the heart of this colossal narrative stands Adam Neumann, a charismatic, enigmatic figure whose vision was as captivating as it was audacious. Born in Israel, Neumann brought a unique blend of spiritual aspirations and aggressive entrepreneurial drive to the table. He wasn't just selling office space, he was selling a lifestyle, a philosophy, a community. He believed WeWork could be more than just desks and Wi-Fi. It could be a global movement, connecting people and elevating their consciousness. This wasn't just business, it was a mission, infused with his incredible, undeniable personal magnetism. Before WeWork, there was Green Desk, an eco-friendly co-working space founded by Adam Neumann and Miguel McKelvey in 2008. They sold it to their landlord, who offered them a free space in a building in Soho, New York. This small, unassuming gesture sparked the birth of WeWork in 2010. Imagine, from a single floor in Soho, they started building what they believed would be a worldwide phenomenon. It's a testament to the power of a simple beginning and an extraordinary drive to scale. The initial concept was simple, but their ambition, right from the start, was anything but ordinary. WeWork quickly distinguished itself from traditional office providers. It wasn't just about renting square footage, it was about fostering a vibrant, dynamic community. They offered stylish, modern spaces, complete with free beer, coffee, and even events like yoga classes and networking mixers. This community aspect was incredibly appealing to startups, freelancers, and small businesses who craved connection and flexibility. It tapped into a deep human desire for belonging, transforming the mundane act of going to work into an engaging, almost social experience. This wasn't just an office, it was a club, a movement, a lifestyle. Fueled by this compelling vision and impressive early traction, WeWork embarked on an aggressive global expansion strategy. They were opening locations at a breathtaking pace, seemingly everywhere at once. From New York to London, Tel Aviv to Shanghai, WeWork signs popped up in major cities around the world, transforming commercial real estate landscapes. This rapid growth was a testament to their ambition and their ability to attract talent and investment. It was an astonishing display of scaling, a true testament to the power of a captivating business model and an even more captivating narrative that investors simply couldn't resist. The investment world simply couldn't get enough of WeWork. Venture capitalists, dazzled by its growth and Neumann's compelling vision, poured billions into the company. It was a race to invest in what everyone believed would be the next tech titan, a disruptor of unprecedented scale. Early investors included powerful names, captivated by the promise of revolutionizing office spaces. The money flowed freely, allowing WeWork to continue its hypergrowth, expanding into new markets and experimenting with new ventures. The excitement was palpable, a gold rush for the future of work. It felt like nothing could stop them. Then came SoftBank, and specifically, its Vision Fund, led by the enigmatic Masayoshi Son. Son was captivated by Adam Neumann's vision and saw WeWork not just as a real estate company, but as a technology firm with limitless potential. SoftBank invested billions, becoming WeWork's largest backer and effectively fueling its stratospheric rise. Son's deep pockets and even deeper belief in Neumann propelled WeWork's valuation to mind-boggling heights, transforming it from a promising startup into a global phenomenon. It was an investment that would define an era of venture capital excess, truly remarkable. At its zenith, WeWork achieved an astonishing private valuation of $47 billion. Think about that number for a moment, $47 billion for a company that primarily leased and then subleased office space. It was seen as a technology company, a lifestyle brand, a disruptor, justifying its colossal valuation in the eyes of its investors. This valuation placed WeWork among the most valuable startups globally, a true unicorn of unicorns. The sheer scale of this achievement was absolutely incredible, reflecting the boundless optimism that surrounded the company and its visionary leader. WeWork's ambition stretched far beyond just co-working spaces. Under Newman's guidance, the company ventured into a dizzying array of other projects. There was WeLive, co-living spaces, Rise by We, a luxury gym, WeGrow, an experimental private school for children, and even a wave pool company. These ventures showcased Newman's expansive vision to create a We ecosystem that would touch every aspect of a person's life, from where they work to where they live, learn, and even exercise. It was a truly holistic, albeit incredibly ambitious, approach to brand building. The story WeWork told was one of innovation, community, and tech-driven disruption. But behind the glossy marketing and charismatic presentations, a different reality was slowly taking shape. The fundamental business model, while disruptive, was still rooted in real estate, notoriously capital-intensive and less scalable than pure tech. The incredible narrative was driving investment, but was it masking the underlying operational complexities and escalating costs? It's a question that would become increasingly critical as the company matured. This fascinating tension between perception and reality is truly captivating to watch unfold. As WeWork grew, so did the concerns over its corporate governance. Adam Newman's control was extensive, holding a majority of voting shares. He was also involved in self-dealing transactions, like leasing properties he owned back to WeWork. These actions raised serious red flags for potential investors and governance experts. It created a complex web of personal and corporate interests that began to blur the lines of ethical business practice. The concentrated power structure, while allowing for rapid decision-making, also presented significant risks and was an absolute magnet for controversy. One of the more illustrative examples of the company's extravagant spending and Newman's lifestyle was the purchase of a $60 million private jet. This luxury item, while perhaps justified for a CEO of a global company, symbolized a disconnect between the company's lofty mission and its increasingly lavish expenditures. The optics were problematic, especially for a company still burning through billions of dollars without clear profitability. It was a stark visual representation of a culture that seemed to prioritize expansion and luxury over fiscal prudence. An absolute head-scratcher for many observers. In another curious move, Newman sold the rights to the We brand name, which he personally owned, to WeWork for $5.9 million. This transaction, essentially selling an asset he owned to his own company, raised even more questions about conflicts of interest and corporate ethics. It highlighted how deeply intertwined Newman's personal finances were with the company's, further eroding investor confidence. It was a deal that truly exemplified the unique, and often baffling, financial decisions being made at the very top. An absolutely incredible example of blurred lines. Despite its astronomical valuation and relentless expansion, WeWork was hemorrhaging money at an alarming rate. The company's business model, which involved signing long-term leases and then subleasing for shorter terms, meant it was always exposed to market fluctuations. It required constant, massive capital injections to sustain its growth. The losses were not just growing, they were accelerating, revealing a fundamental challenge in achieving profitability at scale. This was a company expanding at warp speed, but leaving a trail of red ink that was becoming impossible to ignore. A truly unsustainable trajectory. The moment of truth arrived in August 2019, when WeWork publicly filed its S-1 prospectus for its initial public offering. This document, intended to entice investors, instead exposed the company's chaotic finances and questionable governance practices to the harsh light of public scrutiny. The narrative of a tech company crumbled under the weight of detailed financial statements. Analysts and journalists tore apart the filing, revealing astronomical losses, self-dealing, and an alarming lack of transparency. It was a catastrophic misstep, revealing the emperor had no clothes. A truly pivotal moment in this unfolding drama. The S-1 filing also highlighted some of WeWork's more unusual corporate declarations. For instance, the company's mission statement included to elevate the world's consciousness, a grand ambition that seemed wildly disconnected from the reality of its enormous financial losses. Critics scoffed at the lofty rhetoric, finding it ironic given the extensive self-enrichment by its founder. This stark contrast between aspirational language and operational reality further fueled skepticism, turning the company's unique culture into a point of ridicule rather than admiration. The We philosophy was suddenly seen in a very different, far less flattering light. Following the S-1 filing, WeWork's once unshakable valuation began a dramatic freefall. What investors initially valued at $47 billion was suddenly being re-evaluated at a fraction of that, with estimates plummeting to as low as $10 to $15 billion, and even lower by some. The market simply wasn't buying the hype. Public investors demanded profitability, sound governance, and a clear path to sustainability, things WeWork seemed to lack. This rapid devaluation was absolutely stunning. A brutal reality check that shook the entire startup ecosystem to its core, revealing the fragility of even the most well-funded unicorns. The pressure on Adam Neumann became immense. Investors, particularly SoftBank, grew increasingly concerned about the viability of the IPO and the future of their massive investment. The board, once seemingly under Neumann's spell, now faced intense scrutiny and demands for change. The company's reputation was in tatters, its public image severely damaged. Every day brought new revelations and fresh criticism, creating an unbearable environment for leadership. It was a full-blown crisis, escalating rapidly, threatening to engulf the entire enterprise. The once untouchable founder was suddenly on very shaky ground. In a dramatic turn of events, Adam Neumann was forced to step down as CEO in September 2019. It was an astonishing fall from grace for a founder who had been the charismatic face and driving force behind a $47 billion company. The board, pushed by SoftBank and other major investors, decided that a change in leadership was essential to salvage the company's IPO hopes and reputation. This was a seismic shift, marking the official end of the We era as defined by its visionary, controversial founder. It was truly an unbelievable moment for the business world. With Neumann out and the public market skepticism firmly entrenched, WeWork officially shelved its highly anticipated IPO. The dream of going public and raising billions was dead, at least for the foreseeable future. This decision sent shockwaves through the tech and venture capital world, signaling the end of an era of easy money and sky-high valuations for unprofitable startups. It was a stark reminder that even with immense funding and hype, fundamental business principles eventually prevail. The spectacular crash of WeWork's IPO ambitions was a cautionary tale for all. A truly epic collapse. To prevent WeWork's complete collapse, SoftBank stepped in with a massive rescue package. It wasn't just an investment, it was a bailout, effectively seizing control of the company. SoftBank injected billions more, buying out other investors and offering a lifeline to prevent bankruptcy. This deal slashed WeWork's valuation to a mere $8 billion, a stunning 80% drop from its peak. It was a desperate move to protect their colossal investment, but it also cemented SoftBank's control and dramatically reshaped WeWork's future. The scale of this financial intervention was absolutely mind-boggling. Adding another layer of controversy, Adam Neumann reportedly received a staggering exit package from SoftBank, estimated at over $1.7 billion. This included a credit line and the ability to sell his shares. For many, it was an egregious reward for a founder who led his company to the brink of disaster, while thousands of employees faced layoffs. The optics were terrible, further fueling public outrage and raising questions about accountability in the startup world. It was a truly shocking payout that left many scratching their heads and ignited a firestorm of criticism. With Adam Neumann gone and SoftBank in control, WeWork began a painful but necessary restructuring. New leadership, including Sandeep Mathrani as CEO, was brought in to instill fiscal discipline and focus on the core business. The extravagant ventures like We Live and We Grow were shed, and thousands of employees were laid off globally. The goal was simple: stop the bleeding, cut costs, and find a path to profitability. It was a dramatic shift from visionary expansion to grim operational efficiency. This was the hard reset, a sobering but essential step to survive. Just as WeWork was trying to find its footing, the COVID-19 pandemic hit in early 2020. This global crisis, which forced millions to work from home, seemed like a death knell for a company built on shared office spaces. Demand for office space plummeted, and many WeWork locations emptied out. It was an unprecedented challenge, adding immense pressure to an already struggling company. The very concept of co-working was under threat, pushing WeWork to adapt or face annihilation. The timing couldn't have been worse, adding a cruel twist to an already dramatic saga. Against all odds, WeWork began to adapt. The pandemic, while initially devastating, also highlighted the need for flexibility in office solutions. Companies realized they might not need large, permanent offices but still needed adaptable spaces for hybrid work models. WeWork pivoted, offering more tailored solutions for enterprise clients and emphasizing safety protocols. They leveraged their global footprint to offer solutions for dispersed teams, finding a niche in the shifting landscape of work. It was a remarkable demonstration of resilience in the face of unimaginable adversity, truly impressive. In an astonishing turn of events, WeWork made a second attempt to go public in 2021, not through a traditional IPO, but via a SPAC merger. This time, the valuation was a much more modest $9 billion, a far cry from its $47 billion peak but a testament to its survival. The company presented itself as a leaner, more disciplined entity, focused on profitability and efficient operations. It was a quieter, humbler debut, reflecting the painful lessons learned from its initial spectacular failure. This second chance was a truly remarkable comeback, against all odds. Despite finally becoming a public company, WeWork continued to face immense challenges. Profitability remained elusive, and the market for flexible office spaces was more competitive than ever. Their stock price struggled to gain momentum, reflecting ongoing skepticism from investors about its long-term viability. The ghost of its past valuation and the saga of its founder continued to weigh on its public image. It was a constant battle, proving that going public was just one step on a very long and arduous road to sustained success. The struggle was, and still is, very real. Adam Neumann, though ousted, left an indelible mark on WeWork. His grand vision, relentless ambition, and unique leadership style were undeniably the catalysts for its explosive growth. But his controversial decisions and governance issues also directly led to its near collapse. His story is a powerful cautionary tale about the perils of unchecked founder power and the intoxicating allure of hype over substance. It's a complex legacy, one that sparks endless debate about what truly defines entrepreneurial success and failure. You simply can't tell the WeWork story without him. The WeWork saga is, in many ways, a microcosm of an era of unprecedented venture capital speculation. Investors, eager to find the next big thing, often overlooked fundamental business principles in pursuit of hypergrowth and disruptive narratives. WeWork benefited enormously from this environment, but it also became a stark example of what happens when that speculation reaches its limits. It's a compelling illustration of market cycles, investor psychology, and the constant tension between innovation and intrinsic value. A truly fascinating case study for anyone interested in economics. What can we learn from the meteoric rise and dramatic fall of WeWork? Perhaps the most critical lesson is the enduring importance of sound corporate governance, clear paths to profitability, and realistic valuations. the market, eventually, demands substance over sizzle. It's a powerful reminder for both entrepreneurs and investors to remain grounded in fundamental business principles, even when chasing audacious dreams. The WeWork story serves as an invaluable, albeit painful, case study for the entire startup ecosystem. These lessons are truly invaluable for future innovators. Despite its tumultuous journey, WeWork undeniably impacted the commercial real estate industry. It popularized the concept of flexible office spaces and influenced how many companies think about their physical footprint. The desire for community and adaptability in the workplace, which WeWork championed, remains strong. Its story, therefore, isn't just about decline, it's also about a transformative idea that, perhaps, got ahead of itself. The conversation about the future of work has been forever changed by WeWork's ambitious, often chaotic, legacy. A truly unforgettable chapter in business history. Today, WeWork continues to operate, albeit as a much smaller, leaner, and hopefully wiser company. It's still a significant player in the flexible office market, attempting to carve out a sustainable niche. The dream of elevating the world's consciousness has been replaced by a focus on practical business solutions and consistent profitability. The journey has been long and fraught with peril, but WeWork still stands, a testament to its underlying value proposition and the sheer determination of those who remained. It's a company still fighting for its future, truly a compelling watch. The story of WeWork will forever be etched in the annals of business history as a cautionary tale. It's a narrative that captures the exhilarating highs of entrepreneurial vision and the devastating lows of unchecked ambition and financial mismanagement. It reminds us that while innovation is vital, it must be tethered to solid business fundamentals. It's a story of a company that flew too close to the sun, fueled by hype and billions, only to fall back to earth with a spectacular crash. But what an absolutely incredible, unforgettable journey it has been. Ultimately, WeWork's journey accelerated the evolution of the future of work. While its initial approach was unsustainable, the core idea of flexible, community-focused workspaces has undeniably permeated the global business landscape. Hybrid work models and distributed teams are now the norm, proving WeWork was, in some ways, ahead of its time. The challenge, as always, is executing a visionary idea with practical, profitable business strategies. WeWork's rise and decline offer invaluable insights into this ongoing transformation. A story that continues to shape our professional lives, fascinating. As WeWork navigates its next chapter, it serves as a powerful reminder of the delicate balance between innovation and integrity. The business world watches with bated breath to see if it can truly shed the baggage of its past and emerge as a truly sustainable enterprise. Its story is far from over, but the lessons from its meteoric rise and dramatic decline are already shaping a new generation of entrepreneurs and investors. It's a captivating testament to the dynamism and brutal honesty of the market. Thank you for joining us on this incredible deep dive.